I don't think it's a win-win, but the question we get most frequently is, what is the end game of the trade war? And we've been saying that the end game is a negotiated solution. It might not be this year. There might be a long and acrimonious negotiation. It might do some damage to the U.S. economy along the way. In fact, $250 billion in tariffs is big, and it's at the level where it might start to do some damage. But that's the direction we're headed in. And the fact that China is unilaterally taking down its tariffs, it's evidence that there's a lot to play for here. So from an investor's perspective, we're still, I guess there's a medium-term versus short-term issue here. We have near-term caution fading into medium-term constructive outlook.
But even the overseas markets jumped overnight. I mean, Jerome, the CSI 300 in China tracks the blue chips in Shenzhen and Shanghai, jumped 3%.
Right. Investors are looking for the longer-term view, but admittedly, it's a situation right now that growth is still robust here in the United States. There's probably just as much upside potential as downside risk that we're seeing due to tariffs and other things, and people are taking a more prolonged view of that. That being said, one thing we have to keep in mind is simply this is a high conviction market. Ultimately, when you get into a high conviction market, investors are making allocations to equities because they're highly convicted, but the uncertainty is growing in terms of the tail risks that are going further as we get into later this year and into next year, simply because of the rate hikes that we are projected to see from the Fed next week and obviously through the course of 2019 and maybe even beyond.
So when you say upside potential, I'm just curious as to what undergirds that view, because we're had very strong earnings this year, but people believe comparisons next year will be more difficult. So why more, as much, if not more, upside potential?
No, when I say upside potential in terms of where rate trajectory is going.
I'm sorry, I misunderstood.
No, and I think it's important to highlight that there is upside potential in terms of the market and risk taking, but investors are taking a more cautious view in terms of how they're allocating that risk at this point in time. Ultimately, they're going to be mindful of the risks that we see. Tariffs are one of them, election outcomes are another. But rising rates ultimately creates two sets of situations. One is a risk to how risk assets are priced. And on the other hand, it creates an opportunity for investors to really take advantage of higher rates in the U.S. and actually get paid for being in safer assets, especially in the front end of the yield curve.